All right, guys, good evening, everybody. Welcome aboard to our market recap for the week. Glad to be with you this evening. It is Sunday, January 7th, 2024, brand new year. My name is Carlos Garcia. I'm the founder and CEO of Gar Capital. Glad to be with you, recapping the week in options trading, previewing the next week, and hopefully you guys enjoy these videos. If you do, make sure to hit that like button, turn on, subscribe to our channel, and turn on notifications. Really do appreciate it. Our goal in the future, obviously, is to get to one of those plaques, 100,000 subscribers. So if you like this channel and you know people that maybe be interested in day trading and stuff like that, just keeping it real, talking about the important stuff and the macro, man, share this video with somebody. We really would appreciate it. Right now, we're at 8607 in subs. Let's crack 10,000 in 2024. That's the goal this year. Okay, so we're gonna go ahead and start with how the week went. This is our Discord server, as you know. And here was our week. It was a short one. We played FIZZ, the 30 calls for January 19th. Bought some time. As we know, we had a choppy week. We went over from before videos before that those short weeks, those holiday weeks, we don't tend to do well. So again, we want to be extremely tactical, very not conservative, but we want to make sure and just get what we got to get and get the hell out of there. So pretty good week so far, I must say. FIZZ returned 35%, opened at 10:07 a.m. Max drawdown was 5%. We closed it the same day at 10:29 Eastern time. So that was about a 22-minute trade. The highs hit in the money at 65% this week. So again, if you notice, I started putting a lot more notes into our trading journal. So we can, when we go over it, it's a little easier to talk about in terms of context. I really wanted to put the max drawdown. That's kind of important for everyone to know. So Citibank, 55 calls. We got those in Jan 19 expiry as well. We filled these literally the day after New Year's. So that was on Tuesday. And we got them the same week. So we helped for the melt up. Got as high as 110, not 40%. We got 71% for y'all. So it was a nice trend higher. So again, we know the financials are reporting this week. We're going to go over that here in a bit. But it got as high as 110, and we got a full position close at 71%. And yeah, we're holding runners on Citi for the earnings that are coming up because these expire on the 19th of January. So we got time. But good trading all around. I'm very proud of the team. Let's go and take a look at FIZZ together. If you guys want to take a look at futures this evening, Dow futures are down 38. Most of that, more than likely, is probably Boeing. As you know, what you heard about the 737 MAX, and then mid-flight, there was a door that blew open. Crazy stuff. Everyone landed okay. The NASDAQ is up about 0.21%, the S&P up 0.15%, while the Russell, which has been taking a step back, is up 0.44% on the future side. So here we go. All right, so FIZZ is the first one that we did. We got in on Tuesday on this big push higher. And again, we had, I want to say, what was it, the 30 calls? There was a high volume there, and we traded it same day. So we really took advantage of this push here on that Tuesday, got out same day, got as high as 65% and pulled back. It's not in the money anymore. Obviously, those runners, I believe, went red. So again, if you're holding it great, that's fine. Again, you have time. But if you took your profits, that's fine too. Whatever works for y'all. But again, a beautiful move to the upside. We saw the volume and we played it. Citibank, and I think that FIZZ, I think we traded with Masterclass as well. No, I didn't. I did not. No, I thought that was just for premium. Citibank here, we could see that push higher, that melt up higher. We got as high as 54.75 on Thursday. That's where we got the melt up, and we pulled back. Friday, there was not much going on, as we know, but it looks like we're going to break out again. So this is another stock that I want to keep an eye on. Obviously, we have the banks reporting this week. Looks like we're going to get a breakout on Citibank anyways. So if you have runners, great. The next target would be right around 57.56. So I want to go ahead and pivot now to how the week was in terms of the stock market. And you can see the Dow was down 0.65% this week. Again, short week after an incredible November and a pretty decent December. S&P down 1.8%. The NASDAQ down 3.5% for the week. And the IWM, I know, small caps were my top 10 of 2024. Not a great start, down 5%. So we know that a lot can happen in a year, and this is just the first short week of the year. So we'll see what we get. But I still believe that IWM still gets the rotation into it. We're going to talk more about the investment strategy for the year, kind of talk about the macro. I haven't recorded that video yet. I just wanted to focus on this week coming up because this is our first full week trading for 2024. So very exciting stuff. So that's what we did for the week 2 and 2. Very, very pleased. The goal this year is to minimize losses as much as we can. If that means we got to take less trades, so be it. But again, we want to hit as high as a hit rate as we can. We think we averaged about 76, 77% last year. Again, I want to get that total for y'all when we do the video. Obviously, we'll go into more details. I'm going to break down every single month. This is going to be on YouTube. This is going to break down every single month of 2023, what worked, what didn't, and what we could do to be better. That'll be coming out soon. Again, please subscribe to our channel if you are interested in those videos and turn notifications. It will be public for everybody. But this video here is public as well. This is the recap video. We do this every weekend, recapping the options trade. So glad to be with you if you're just joining in. Taking a look here at what's to come in terms of economic data. Important. So now we're previewing the week we just talked about last week. Again, not much to talk about in terms of the market. Short weeks I really don't see as a big barometer of anything happening. Everyone's coming back to the office on Monday, let's just say. Everyone's going back to school on Monday. So as you can see, not much going on Monday and Tuesday. We have a 10-year bond auction. That's going to be important. 4.3% was the last bond auction. We'll see what we get with that. Again, we want lower yields. So again, we want a good bond auction, good demand. Thursday, big reports. We got CPI. This is the Consumer Price Index. We know about the inflation story. It may not be as prevalent as before, but just know that in 2023, our best weeks of return in terms of win-loss was on CPI weeks. So I'm expecting big things this week for us to do extremely well, and I'm very excited for it. But the expectation is 0.2% on a month-over-month on both core and top headline. Year over year, 3.2%. Could we get down to the 2 handle, 2.9% and below? That would be great. I am not going to use the inflation data as any kind of impact on the Fed. I think the pause that they already have is kind of already set in stone. The question is, are we going to get the cut? And in order to get the cut, we really need a soft CPI, if that's what we want. I don't think it's necessary in March. But again, people are expecting that. I don't know why. I think it's a 50-50 shot based on the trader's Fed funds futures rate at the moment. So it does not look at CPI in the sense of, oh, this will help them cut. Let's look at CPI as this will keep them from raising because inflation is still relatively high. 3.2%. It's not at the target of 2% yet. So if we start getting near that on a year-over-year basis, 2.9 and below, okay, we can have that conversation about cutting rates in the future or something like that. But I don't think March is going to happen. So I don't think the CPI will even confirm that with that. But again, what the market doesn't want is any kind of major deviations. We don't want anything too hot, and we don't want anything too low either. We don't want CPI in the negative. That's deflationary, not good. That's when the Fed will really need to cut because we don't want to get into a deflationary spiral where prices start crashing down. Not good either. Got to have it right in the middle, guys. Unemployment claims, again, the labor market is still very strong, as we saw with NFP. We saw it with unemployment claims last week. 211,000 is the forecast. Last week was 202,000. I mean, it's a strong labor market. Again, that's still going to put pressures on wages. That's still going to put pressure on inflation. So let's see if the CPI reflects that. 30-year bond auction at 1 p.m. on Thursday. We'll keep an eye on that as well. And then again, we have the PPI. This is the Producer Price Index for the core and the top line, or the headline number, excuse me. That's going to come in a little less than CPI, obviously, in terms of expectations. So we'll expect that on Friday. And again, not tons going on. Really, the most important thing I would say is really corporate earnings. We kind of know where the macro side of everything is. So let's take a look at the earnings together. And we could see it here. Let's kind of not focus on these names, not names that we trade anyways. Like KB Home, yeah, I'll keep an eye on it. The home builders. We talked about that in terms of the top 10. They're part of it. But top 10 stocks of 2024, I'm sorry. But on Friday, we got JP Morgan Chase, you got United Health, you got Delta Airlines, Bank of America, Wells Fargo, BlackRock, Citi. Yeah, the financials are starting to come into play. So Citi reports on Friday. We just got out of those calls. Again, we have runners. Quote, totally cool. So here's going to be one on the watch list this week. Bank of America. Now, here's the thing. Bank of America, we want to play the run-up into earnings. So what do I mean? If I break 34.69, I want to keep an eye on the 35 calls. Get out for 40, 50, 60% profit on that run-up. pull the plug and get out of it on a Thursday before the earnings, and then we'll let the runners run if it goes higher. Fair enough. But at least at this point, get me above 34.69. We could play the 35 calls, and then maybe we can squeeze a little juice if we buy some time. If we buy like the Jan 19 like we did for Citi, I think the volume will be there and we'll get some demand and at least probably get around. My ultimate goal after earnings would be 36.99 to around 37 with good earnings. So again, I don't know what the earnings are going to be, but as long as it beats expectations, maybe we get some, buybacks, some extended buybacks. Maybe we get a dividend increase, something like that. But again, what we want to do is play the run up. So again, we want to see if there's volume in financials going up into the earnings. Yes, the premiums might be a little juiced in the beginning, but Bank of America is relatively cheap. So just keep that in mind that, again, if we break 34.69, we'll keep an eye on the volume and see where we go. If we break below 33.01, there is a gap to fill here at 32.08. The 32 puts would be in play. So again, below 33, we're taking a look at the 32 puts. There's a gap to fill on the daily, and it's below the 20 days. So that would be momentum to the downside. I don't expect that to happen, but that's what I'm looking at Bank of America. That's something that I'm watching on the list. JPM, again, it's a breakout, all-time highs. Kind of tough to play this. So again, there's going to be a volume-based trade. If we get above 173.38, which is the recent highs, then we can start taking a look at maybe the 175s or so. If we start breaking down below 166, again, that's a far number away. You got a gap to fill here at 165.37. Maybe not the best setup for that. So again, I would kind of focus on JPM long. Bank of America kind of gives us a little bit more flexibility. The only thing I could think of Bank of America would be a retest to 169, which is the previous all-time highs. If we get a pullback, maybe JPM's earnings aren't the best. They don't do buybacks. Pick your excuse. But again, that would probably be the level that I'm looking for as a pivot point, the previous all-time high being support. So again, if that breaks down, then we have a gap to fill right around that 166 area. So again, 169 and below, we'll do 166 puts. That would be the break of the previous all-time highs. That would negate the retest, obviously retest and bounce. And if we break above 173.38, then we could do 175 calls, play momentum all-time highs, keep an eye on longer dated expiry so we don't get chopped up in terms of time. I think Bank of America provides a little more flexibility, but again, JPM isn't terrible because we're going to get some volume this week for sure. And then last but not least, I'm going to go ahead and talk about Apple. Apple's been absolutely smoked, and we talked about that. Again, there's not a lot of sales growth there to really justify the multiple growth, meaning that the price to earnings multiple, all this has been multiple expansion is my point, meaning the business itself didn't do anything different, didn't do anything special, didn't change anything, didn't increase dividends, special buybacks, nothing. It's just the market went higher in November and December, and because Apple's part of SPY, it went up too. So a lot of this could be just multiple expansion. We're going to keep an eye on those earnings. They got to give us some kind of growth here because sales growth for Apple is flat, if not negative, maybe negative 1%. And again, the premium we're paying for their cash hoard, for their patents, for their sales and all that stuff, it's getting expensive, long in the tooth. You're going to get some rotation out of mega cap tech this year. I don't expect mega cap tech to have the same year it did last year. I don't expect QQQ to rise the way it did. Again, you're going to get some rotation. That's what I expect. We'll expand on that a little further in our video previewing the year with our predictions and all that. Right now, we're at the 200-day MA. That's going to be our support. Hard support at 179.50. We are now on the RSI on the daily at 28.76. The last time we were at that level was August 17th. That was right at 171.87. Even before that, we were at the lows of October 26th. That was the same RSI reading that we have now, or if not a little above it. And we went from 165 to 199. Now, I don't think we're going to get there all in one day, but I do believe that we're going to get back to that gap fill here at 192. All this bad news regarding the watch and the patents and then all the antitrust stuff, I mean, that all just comes in waves, and I think it's more of the price is reflecting it at the end of the day. So we do have a gap up to fill to the upside. That might fill maybe with the earnings that are coming up. Who knows? Maybe over time as we get closer to tech earnings, we'll see. Maybe some good news comes. Who knows? Just playing off the technicals, the 200-day MA, 179.50 is your hard support. I like the 182.50s. I like the 185 calls. If we buy some time, let's see if we get a turnaround. I think the bids are going to come in this week. I think all the bears sold and they took their profits. We got a little extended, fair enough. But I think we start getting some buys here running into the new week once everyone's back at their desk. But Apple needs to be on everyone's radar. I wrote that on the blog as well. And if you're not part of the blog, make sure to go to the website, www.gar.capital, choose free plan, and you'll get access on Discord. And I wrote this here on the 5th at 11:56 in the morning. I said the Apple RSI is below 30. I put out a note in Investment Club talking about the levels we are watching. Nice gap to fill at 192. The stock needs to be on our radar moving forward. Calls are in play. Get ready. So this is why I'm telling you to get ready. So here we are. This is what we got for the week in terms of stock options. Let's go ahead and take a look now. See if I can take away this study here. We're going to edit studies. We're going to take away this RSI and apply. All right, let's go and take a look at the S&P before we wrap it up. We talked about earnings. We talked about what's happening in terms of the data. Sorry, my little pup is right here under my feet. Taking a look here at S&P 500, 4,700 being your hard stop. That would probably be my S support one, let's just say, right near that zone of that 20-day moving average. But we do have a gap. Again, this was a rollover contract gap, not a price differential gap. This is from 46.14. Could that fill? Absolutely. We filled this one here, and that was back in June. So we could fill that here around 46.15. That would probably be another hard stop. But 4,700, at least short term, I think we defend that. The only thing that would possibly change it is any kind of talk of a government shutdown, and that seems to be averted for now. We just got the news from CNBC earlier today that congressional leaders reached $1.59 trillion deal on top line spending. So that will avert at least a government shutdown. That should give us a little bit of a clear path to bounce, get us above 47.64. That would probably be my target directly for any kind of bounce play. If we break that, fine. Then we're talking about possibly 48.08, which was the previous all-time highs on S&P 500 futures, but you got to get above that 20-day. So for my futures traders, if you are interested in a little more futures talk, you can go check out the futures channel with Nick. He talks about futures every week as well. I don't know. I think he's on YouTube as well, but he's on the Discord server for our futures traders. So let's go ahead and take a step into NASDAQ world. We're going to go to the daily here. And again, we do have that contract rollover gap. We're way below the 20-day. So you're talking about hard stop support is right around 16,117. If you start breaking down the lows of 334, then you're going to have to target 137 as your stop for the NASDAQ. You do have the 50-day moving average as your next stop at 16,020. We don't have tech earnings as of yet. The banks start us off. So as we get closer to those tech earnings, the Microsofts, the Metas, the Googles, the Amazons, the Apples of the world, then we'll start getting a little more clear on the path of NASDAQ moving forward. But just to reiterate, the three stocks I will be watching this week, yes, financial heavy with earnings, Bank of America, JPM, and of course, Apple being oversold at the 30 RSI and being below that. So that's where we are. We went over a lot of things today. I'm glad everyone had a great weekend and a great week. We started off in the right way, 2 for 2 in 2024. I got more videos to do. Don't worry. Make sure to subscribe so you don't miss anything. Comment your questions. Like these videos. I appreciate you guys as always. Go Cowboys. Beasts of the East. Winners of the NFC East. Next week will be the first playoff game in Dallas. I wish I was going, but I am not. I will be staying, watching in the comfort of my home just in case we lose. I'll be losing my mind. So if we made it to the NFC Championship game or something, maybe I'll have that discussion in terms of if I go to Dallas to watch it or something like that. But as of right now, we've been here before. The wild card last year was in Tampa. I didn't go to that game. I should have. That's pretty close to me. But we'll see. It's going to be a fun one. We got a game tonight too, Buffalo, Miami. Let's see what's happening. And I'm going to go watch that right now. Hope everyone has a great night. And we'll catch you tomorrow morning for the morning note at 9 a.m. Eastern Standard Time. Have a great rest of your evening. I'll see you then. Cheers.